Okay guys, I didn't want to make this video and I have to come clean about something. I think I was really wrong, and I'm going to be in this video outlining some mistakes that I made and my thoughts going forward on the S&P 500, the NASDAQ, gold, etc. Let's jump in. So today I get into the office and I pull up my standard routine, the Edge Finder watch list, to see what is currently getting a bullish or bearish rating. And sure enough, the index, NASDAQ, S&P 500, getting bullish readings. And this made me feel really frustrated because if you've been watching the videos recently, I've been pretty bearish, not bearish, but pretty neutral, pretty cautious on the indices. When we take a look at like the S&P 500, I actually had a long position that trailed out right here. I took profits and the market tanked and I felt really smart. And then I got too smart for my own good. I thought, oh, this thing's going to keep ripping lower. Even though we had a neutral rating on the Edge Finder, I was feeling actually kind of more bearish. I almost went against my system, which was neutral. And although I didn't take any short trades on the indices or on the US indices, I still didn't take advantage of this dip like I was supposed to. I had several different things lined up that I wanted to do on the options side. I basically wanted to sell puts on some of my favorite stocks, and I didn't. And so I missed all of this rip rally that we've seen this week. And now we're getting bullish signals on the Edge Finder. So the reason I bring this up is because I think I made the mistake of thinking I was too much of a hotshot, too smart not to just buy the dip or look for opportunities to do so on some of my names that I was literally writing down in my journal, like, hey, sell puts on Amazon and, look to sell puts on semiconductor stocks and things that I had wanted to do with the dip. I got too cheeky with it. I got too smart with it. I tried to think, oh, it's going back down to the lows. And I did a little bit too much predicting. So I'm coming clean. Wanted to just get that out there because I've been doing this for a long time, but I still make mistakes. I still accidentally, do the wrong thing here. And although I didn't make any catastrophic things or lose a bunch of money, still it feels bad to, kind of have gone against what my game plan was, which was, again, to start selling puts into this market sell-off. And I did it on a very small scale, but I got too brave, too cocky about it, thinking the market would go way lower before I could start getting some cheap shares. And although the market still totally could reverse course and have a big drop off, I think that it's very important that I acknowledge my system, which is telling me now, again, that we're leaning more bullish again. And it makes total sense. Let's think about for just a moment what we got this week. We got CPI and PPI, which came in cooler than expected, which is great news for the markets. We also have the Fed next week, which is now potentially even going to cut 50 basis points, which is a new kind of development. We'll get to that in just a moment, which the stock market has been also probably rallying off of, especially some of the more sensitive to borrowing costs sectors and businesses within the S&P 500. And the third one is actually just price action. If we take a look at the trend section here, we can see that the trend is defying gravity. Even though seasonality was part of the reason why I got neutral or bearish on the indices, the trend ripping to the upside is now telling me, okay, well, price action's bullish, we stay bullish. Also, real quick, guys, if you're not already inside of our Discord channel, we are currently doing a 30% off sale, which is ending today. So all the information could be found down below in the description. But if you'd like to get access to the trades that I am sharing inside of the room each day, every trade that I take with full context, analysis, breakdowns, entries, exits, screenshots, and most importantly, on real brokerage accounts, consider joining our VIP room where you can get access to all of that each day. And we use Discord for that. So if you're not already in there and you'd like to join, the 30% off details can be found below in the description. And finally, if you'd like to get 35% off, we're offering a special incentive. If you chat directly with a member of my staff, they'll give you even more information about the service. Make sure it's right for you, and they'll give you a 35% off discount. Use the first link in the description to unlock that 35% off code. And as we narrow into next week's big data point, this is what I wanted to show you guys. There is now a 45% chance of a 50 basis point cut according to the Fed Watch tool. Now, let me go ahead and put myself out there. I don't think they're going to cut 50 basis points. I think they're going to cut 25 basis points because, again, I think that 50 could actually scare the market. If you give us a big jumbo rate cut, yes, that might sound good on paper, but it might also signal to the market that the Fed looks like they are a little bit concerned about how far behind on this rate cut process are we. If they go ahead and cut just 25 basis points, it would signal, okay, we're going to start cautiously cutting rates, but we feel like we're in a good spot. 50 basis points, in my personal opinion, could be taken as more of a negative. So I actually think that I am bullish on the market, but kind of contingent on where we are with cuts. If we actually get a bigger cut, it's almost counterintuitive, but it signals potential weakness in my personal view in the outlook for the economy. Now, one chart that's absolutely loving the rate cut story is, of course, gold, which I'm still long on. And this is a signal inside of our VIP room that I shared a couple weeks ago, and we've been waiting patiently, but we are seeing the breakout finally happen here. Bigger rate cuts, better for gold. We know that to be the case because, again, that typically coincides with a weaker dollar. So the dollar index dropping here recently off of the prospect of bigger rate cuts potentially coming in next week. And if that happens, again, gold looks really attractive. Not to mention, we also saw the European Central Bank, or the ECB, already cut their rates this week. Next week, by the way, it's overshadowed by the Federal Reserve, but the Bank of England also reports the following day on what they're going to do with their rates going forward, which could be very market moving. And it just seems like rate cuts are the theme right now, and that is very positive for gold. Now, in today's live stream, I discussed a question that I often get when gold or any chart makes a big movement. People are wondering, is it too late to buy gold? Is it time to short gold? And I want to roll that clip because I think it was a very important topic to discuss for many people who may be feeling FOMO at this time. I actually don't want to see 50 basis points, and I've said that a lot. I still actually think they're probably only going to do 25, which I had somebody in my group this morning send me a DM. They said, Nick, is it too late to join the gold trade? And my gold entry here is looking quite amazing. I really wish I had more trades that looked like this. Well, if I was really a genius, I would have gotten it on this retest, because then I wouldn't have had to wait so many weeks here. But the answer to that question, is there still room for gold to go higher? I think sure there is, but the risk to reward is no longer there. So I know that FOMO can feel very frustrating. Trust me, I've actually been going through it this week with the indices, because the indices have been ripping higher. I'm not in them. I'm feeling FOMO big time. That being said, I know there's a lot of people right now who are watching gold and they've got a bunch of FOMO. They're like, oh, gold finally breaks out, makes a move, and I'm not in the move. I'm not in this ginormous move to the upside. That feels so bad. Trust me, I know. Literally, I feel that way this week with the indices. Like, I got stopped out of my S&P trade right here. So it's coming from a place of, I know your frustration. I feel it. It is very familiar. And I've felt it on and off for my entire trading career, the last like 8 years of my life. Like, FOMO's real and it never goes away. If you can't get used to it, if you can't accept that it's going to happen to everybody, then trading's not for you. It's hard, but it's consistently going to be a thing. FOMO is always going to be there. All right. So now that we accept FOMO is always going to be there, is there a trade here? No, there's nothing here for me, right? According to my trading style, you might have something different. You might trade differently than me. But for me, there is nothing to do here. Can I short this market? Is it overbought? Are you kidding me? Come on. We don't short moves that sound like this. Right? That's the sound effect. That's the sound effect for gold right now. If you were to go into, like, picture gold as like a speed racer flying down the highway. If you were to go into his car, I'll play that sound one more time. This is what you would hear inside of his car blasting on the speakers. So cheesy. So stupid. But maybe you'd also hear this. You'd hear the perfect candle sound.
Perfect candle. That green candle right there.
I'm messing around, but there's nothing to do here, right? There's nothing you can't, in my view, in my book, I can't short this. What am I going to short? I'm shorting into a massive bull train rally. Why would I short that, right? There's nothing for me to short. There's no context. There's bullish catalysts everywhere on the fundamental side right now. If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign-up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.